The chart is primarily characterized by slow and flatter trading between short-lived periods of rapid movement. Gradual and stable price action is seen with an upward channel that is reversed by a compact double top. This forms a minor retracement in the larger uptrend. The characteristic movement of this chart is seen with rapid movement in March, followed by relatively low activity into May. If this was a stock chart, there would be accompanying surges of volume at higher and/or consistent levels during the rapid movements. The prior double top range provides excellent reference for the first crucial support boundary, as a small channel presents features of a flat top transitioning to an elongated double top. General 3 Black Crows price action adds strong bearish context in the short and medium term. The potential support range is strong, as seen by the immediate formation of bull hammers, right on the upper and lower boundaries. However, they are immediately neutralized by strong closes under their lows, with the candles that follow. As usual, price action is generally contained within the outlines for greater stability. In this case, the downward channel at the peak has led to a stable downtrend that is able to have a sustained acceleration. This is a case where 2 downtrend lines, or rather a downward channel, is useful instead of just a regular trend line. Once price begins to flatten and rise, it is appropriate to adjust and raise the channel back to the original shallower angle. This will be useful to reference resistance in the case a major recovery emerges, and will still be helpful to gauge the strength of upswings and downswings if the long-term bearish sentiment continues. A defined horizontal support has formed, but the overall bearish situation continues, and is especially pronounced by progressively lower downswings. In this case, April was a very green month, but this detracted from the bigger picture that still sees major influence from the downward slope originating from the long-term peak. Horizontal support did produce a triple bottom to avoid an early descending triangle. However, support can still be under pressure, as the highest swing points since October have not been cleared. A horizontal range within a bearish continuation is still possible. Currently, there are a series of declined downswings in line with the long-term downtrend to increase the chances of another major drop. The immediate completion of a declined triple top reverses the gains made in April almost as fast as they were made. Such a rapid shift weakens the horizontal support, which still holds but proves to be much more fragile, as volatility increases substantially. Even though the past 2 weeks of candles still keep contact with the focal point of the 1.1180 level, there have been clear closes well under the lows of the past 3 upswings. A downswing right under the lower channel leads to a strong bearish continuation for the short and long term, as 1.1180 is decisively breached without delay. This lower channel still has high relevance, particularly with its lower boundary despite being breached several times. That is less common since channels often lose influence after trading crosses above and below them. The channel retains its relatively solid boundaries due in large part to being part of the declined triple top and the failed descending triangle. In this case, the failed pattern of the descending triangle did lead to a bullish resurgence, but only in the short term. In the long term, a classic horizontal resting phase formed prior to the current break lower in a bearish continuation. Here is a unique case where a descending triangle is invalidated and technically does fail. However, since this doesn't lead to a long-term bullish reversal to break over what became the horizontal resting range in a bearish continuation, the overall bearish outline of the triangle is followed. This triangle retains influence, but that diminishes due to major volatility in late March and late May. This also serves as another example where major short-term fluctuations from high volatility can lead to the decreased utility of patterns. However, the overall outlines and the 1.1180 level remained crucial references in assessing the progress of short-term downswings and the larger downtrend. A familiar sight with a horizontal pause prior to a gradual slope, accelerating the larger downtrend lower, is theoretically out of place since it is in the middle of an established downtrend. However, in reality this can happen, and the important feature here is the horizontal support range that still sees the formation of short-term bullish sentiment, with minor upswings forming the shoulders. Then the noticeable decline within what seemed like a mainly horizontal range became clear. Instead of the gradual reversal of long-term bullish sentiment, a head and shoulders within a downtrend represents a pause and gradual transition back to long-term bearish sentiment. It is similar to the horizontal resting phase in bearish continuations that are closer to the outline of 3 methods falling price action on a large scale. This is not as common of an occurrence, but features from head and shoulders in the regular context of an uptrend can still be used, primarily the downtrend line from the head and right shoulder downswings, along with the neckline area. Strict theory can still be adhered to as the right side of the head and shoulders can highlight a descending triangle. In any case, the downward slope and horizontal support range are still the same helpful references for future resistance. In direct contrast to the start of this case study, here is a downward channel transitioning into a double bottom. So far, this double bottom is nearing completion but does show some delay, with neutral to bearish price action in the short term at its upper boundary. This can be concern to an uptrend, but the double bottom is not negated until a clear downswing takes the chart back to the area of the 2 upswings. A bullish reversal is underway and can continue as long as the chart begins clearing the upper boundary of the double bottom soon. The double bottom outline is quite close to perfect, and the minor delay of its completion has been resolved by 3 methods rising price action firmly establishing over the upper boundary. As usual, once a trend line, or in this case a channel, is breached, there is flatter price action. It would be a stretch to say there was a head and shoulders, though a similar outline appears with the late August downswing's peak trading well above the downswing points before and after it. This was more of a wide horizontal resistance range. As noted at the start, this chart falls into periods of lower activity and tends to stagnate after rapid movements.